In this video, I'll reveal my full trading plan to trade the New York Killzone using ICT concepts. I'll go over everything you might need, types of the daily cycle, continuation versus reversals, steps and checklist, and finishing the video with examples. If you appreciate my effort in this video, all I request is to subscribe, like, and share the video. Let's get into it. So starting with this, when it comes to trading any session, we need a reference level, or we need a reference point to understand where we are in the current price action. When it was for the Midnight Killzone, so if you guys know that, we already had a full trading plan trading the Midnight Killzone, and that's the one we trade every day in the Discord with everyone, and a lot of people found success sticking to that specific model every day, and they're being profitable just by trading the London session and the agent sweep. So we talked about this a lot of the time. If you haven't watched that video, and if you're only trading the London Killzone, then you need to watch that video. So when it was trading London Killzone, we need also a reference level. And what was that reference level? First of all, so going back in time, we're going back in time, right? So this is the London Killzone. If we go back in time, so where we are now compared to the Midnight Open, and then we also need to compare the current price action to the agent session. So agent session is going to be a reference point or reference level, and then I want to see where am I compared to the agent session. Are we above or are we below, and what happened at the agent session to understand what to do in that Midnight Killzone. Now the same thing, we're going to be following the same approach, the same method when it comes to the New York Killzone. So this is going to be your full trading plan to trade the New York Killzone, and it's going to be kind of the same approach to trading our London Killzone. So when it comes to New York Killzone, we also need a reference level or reference point. What's that going to be? So going back in time, it's going to be the London Killzone, and then the Midnight Open level, and then the agent session. So I want to make sure that I'm marking all those levels or all those time periods, and I want to understand in New York Killzone, where am I compared to those levels? If you're not familiar with the time windows, then in New York Killzone goes from 7 a.m. to 10 a.m. EST. Remember that any time I mention in this channel is always in the New York time zone. Okay, so New York goes from 7 to 10 EST, 7 a.m. We're going to be looking also at the London Killzone. So going back in time, you see we're going back in time. This is London Killzone is going to be 2 a.m. to 5 a.m. EST. This is the London Killzone. Midnight Open is going to be the midnight candle opening price. The more you go, so I would say 15 minutes is a standard. The lower you go, the more refined you got it. So you could go 1 minute, you could go 5 minutes or 15 minutes. I would say maybe stick to 15 minutes, or if you want more refinement, then you could do the 1 minute time frame. And then we're going to go to agent session. So 20 to midnight EST. That's your agent session. If you want an indicator that marks or highlights all those time windows for you, then make sure to watch my indicators video. I went over all my indicators that I'm using, and one of those is the session indicator. Those are the levels that I need to mark in order to understand what do I need to do in the New York Killzone, or what to look for in the New York Killzone. Now every day it's not going to be the same, so this is not a very simple strategy to follow, because when we have, or when we're trading the New York Killzone, we're only dealing with mostly the higher time frame POI and the agent session. When it comes to New York, because now we have more reference levels, so we could have more variations, we could have more, different daily cycles in this case. So I really did analyze most of the days and came up with those 3 types to follow. Okay, so most of the time they're going to be those 3 types, and mostly type 1 and type 2. Type 3 is going to be kind of a more rare situation, and you're going to understand why. So all those types are about the London session, what happened in the London session, and what happened in the agent session. Okay, because those are our reference points. I want you to use the Midnight Open as also a reference level. I did not mention it here, but we're going to go over it on the examples. Anything above the Midnight Open, most likely we want to sell. Anything below the Midnight Open, it's in discount, most likely we want to buy, but it's not the situation every time. We need to understand what happened previously. The power of 3, we see if we already had the manipulation, then there's no need to go again above the Midnight Open or below the Midnight Open one more time. Okay, so starting with the type 1, and that's gonna be London session sweeps agent high or low with a market session shift inside of a higher time frame POI. So you see those 2, market session shift and POI, higher time frame POI. This actually confirms you the Direction. This confirms you that we have a Judah swing already. What is a Judah swing? It's the false move or the manipulation before the real move. So when we have that Judah swing, it's actually gonna give us the direction. So Judah swing to the upside. So let's say we have Asian session, Judah swing to the upside. This confirms what? A downtrend or a bearish move. The same thing. So we have Asian session, Judah swing to the downside. This confirms a bullish move after that. When we have this type, this is the easiest one to trade. Most likely looking for this if you're a beginner, maybe this one. Also, this one is easy to spot, but it's really rare to happen. When we have this tab one, so we have the Judah swing, which equals the direction, then that leads to most likely an OTE New York retracement. So most of the time, we got the Judah swing on the London session, and then we get a retracement on the same direction, and it's an optimal trading entry. So most likely 61% or 79% or 70.5% retracement of the last price action leg, and then we could enter. Sometime it's going to be into a PD array, and sometime it's an inducement or liquidity level taken, which was an inducement, and then continuing lower or higher, depends on the Judah swing, which is the direction. And that's, in my opinion, the easiest type to trade. Now in type 2, it's going to be a little bit different. We're not going to have a sweep and then price coming back with a market session shift and then a Judah swing confirming the direction. No, it's going to be a little bit different. So we have the Asian session, and then just price goes below it. So it's a breakout and then just continuing in that direction. So London breaks Asian high or low with no retracement, which means that we have no Judahs, which leads to, instead of a retracement and a continuation, is going to lead to New York reversal. So whatever the direction was on London, let's say going up, is going to be a reversal going lower on New York. Or if it was going lower on London, it's going to go up on New York. So it's always going to be the opposite. Not always, but based on probabilities, most of the time, type 2 is going to lead to reversal. Remember that it's not going to be 100% all the time. The market doesn't work like this. We're trusting the probabilities based on those types. Now, in order to spot the reversal, we're going to be using higher time frame POI, so point of interest, any PD arrays above or below price going there. We can expect a reversal happening from there, or SMT, smart money technique, or SMT divergence, okay? So we're going to be looking for POI or SMT in order to spot that reversal. And if you're not familiar with SMT, then make sure to watch my video about it. Now, type 3 is going to be, it's not going to be happening all the time, and you'll understand why. So it's London staying inside the Asian session range. So let's say we have big Asian session range, and then London starts and it's inside. Now, why this happen and why it doesn't happen most of the time? Because most of the time, Asian is a low volume session. So it's gonna create the high or the low in order to engineer liquidity. And most of the time, London is higher in volume and it's higher in volatility. So most likely it's gonna either break above or at least take the low or the high of the Asian session. So it's gonna be more in volume and it's gonna be more in expansions, right? At least we're gonna take the low or the high, or maybe break above, or maybe taking the high and the low of the Asian session. So that's why it doesn't happen always, because most of the time London session is more in volume than the Asian session. In this case, we're gonna be waiting for New York Killzone to sweep the Asian higher low. And also sweeping the Asian higher low means we are sweeping the London because it's inside. So we're actually going for the external in this case, which is gonna be the Asian. So in this case, London is gonna be internal liquidity and the Asian is gonna be the external range. And we're gonna be looking for price to sweep the external. And that's gonna lead us to the same thing here in the first type, Judah swing, which was gonna happen on the New York sweeping the Asian higher low, means the direction, and we can actually trade after that, the same as we're doing with the London session strategy. Okay, so it's price taking the Asian high or Asian low, then looking for market session shift or CISD, and then entering from there with any type of entry. Now, you're not gonna go to the chart now and you're gonna understand all those types. You actually need to practice. You need to practice hours and hours in order to identify and determine the tab of the cycle that you have for that day. It's not gonna be easy. I'm telling you, sometimes, yeah, it's easy, but not every time. Sometimes you're going to think that it's type 1, but in reality, it's type 2. Now, this one is very easy, right? If it's inside of the agent range, then you cannot be subjective here. Agent session, which has a lender session inside of it, that's very objective. But those can be subjective, and you need to practice before entering any trade, before risking your own money. Now, we already understand and we're able to determine if it's going to be a continuation or reversal based on the previous slides and based on the previous method. And that one is going to be very accurate. Why? Because we're involving, daily cycles as well as PD arrays and SMTs. And, we're going to understand the continuation and reversal from there. But there is another method that is also valid, and it's higher probability. Is going to be just by looking visually on what is happening on the session, right? And then if we also combine PD arrays and SMTs, it's going to be more accurate. So continuation versus reversal. Reversal, what does that mean? It means that price trends and reversals. And I'm not mentioning retracement here. I'm mentioning reversals here. What does that mean? It means that if London is going higher, then the reverses mean the other direction on the New York. Now, continuation is London going higher, maybe a small pullback, then New York going higher, the same direction. So here, opposite direction, here, same direction. Okay, so that's the understanding of it. Now, when we could have a reversal, it's going to be price trending in one direction and then reverses in the opposite direction. That's going to happen if the London session consistently trends upwards without a significant retracement. We anticipate then a potential downward reversal during the New York session. And the opposite is also true. It applies the same. If the London session consistently trend downwards without a significant retracement, then what do we expect to happen? We expect a potential upward reversal during the New York session. So it's going to be the opposite in direction when we have the reversal. And we're going to understand when this happened by example. So this is the rules here, but we're going to go over examples later. Continuation is price trending without reversal. And I'm not saying retracement here or pullbacks. I'm saying reversal, because reversal is different than a pullback or retracement. Retracement like this. Reversal is going like this and then pushing lower, opposite direction with a displacement. This is going to happen if the London session trends upwards and then significantly retraces in the same session. So you see, you got to have a line here, retraces in the same session. If this happens, then we anticipate a potential upward continuation during the New York session. And it's not going to be any retracement. I want to see a significant one, okay? Now, if the London session, also the same, if the London session trends downwards and then significantly retraces in the same session, we anticipate a potential downward continuation during the New York session. We're going to go over some examples and you're going to understand just how to determine the continuation versus reversal just by looking at the session. And just by highlighting the session, looking at what happened inside of it, I can actually expect even sometime without looking at PD arrays or SMT or anything. So you see examples of continuation. This is euro dollar and this is pound dollar. We can see that we're going lower here, and this is the Asian range. What happened here is we did not take the Asian low, we took the Asian high, and then we had a market structure shift here. What happened after? Price did not just keep going lower, lower, lower without any pullbacks or just displacement lower like this. What happened is we took the Asian high, which this one, what does it do? It gives you the direction because this is the Judah swing. So Judah swing to the upside means direction to the lower side. Judah swing to the lower side means the direction to the upside. Now what happened here? We started going lower, but then we had a valid pullback and actually a significant pullback. And then we started going lower. What happened after? Continuation on the same direction, going lower. So you see, it's a continuation, going lower, going up, going lower, same direction on the New York Killzone. Also the same thing happening on the pound dollar. What happened here is what? We can see we took Asian low. There was no valid market structure shift. We took another low here below the Asian session, below midnight, which is going to be around this level, right? We took it here. We started going higher and we filled a fair value gap. Now, after filling this fair value gap, did we just go up like this? No, we had a pullback, small one, and then we also continued lower. So we did not just keep going higher like this. It was a structure. What happened after is price coming lower, mitigating and actually sweeping a liquidity level here, continuing on the same direction as the London session. So you should see Judah swing here going higher. We had a pullback, which means that continuation could be more probable, and that's what happened. Now reversal on the other hand is what we got. Asian session here again, euro dollar. We're just, we broke below, we just keep going lower, and then in between New York and London we had a significant pullback, but it was not mainly, you see, London just kept going lower. So in this case, what I'm expecting is maybe taking the London low or the low that happened in between, sweeping, going higher, even though there was a pullback here. But if we look at the London session, it was just going lower. Okay, no significant pullback until right here, which is on the lunch break of the London. So in this case, we expect this low being taken and then opposite direction as our bias. Same thing happening here. We just closed below, started going lower, no significant pullback at all, no significant pullback, right? So you see maybe two candles but going lower, so this is not a significant pullback. I want to see something like this, at least, a clear structure here, but then we just keep going lower, we sweep the low, we push higher. Okay, so opposite direction. So just by looking visually at what happened in the session, because price cannot just keep going like this, right? If it was going like this, we know that the reversal is very soon to happen. Now, some people would tell you, oh, this is 100% happening all the time. There is nothing in the market that happens 100% of the time. But take a look at this. We had Asian session. We keep going lower. We had no significant pullback, maybe somewhere in here. But then we just kept going lower. And it was the same direction. So sometimes it's not going to be following approach that we're following. It's not going to follow the things that I taught. It's not going to be all the time. Maybe price, depending on the PD arrays, we had a drawn liquidity here that needs to be reached today, right? So that's why price did not reverse from somewhere in here. It just kept going lower. So we need to understand also PD arrays and drawn liquidity and SMT. Maybe there was an SMT here. So we actually need to understand, that this doesn't happen all the time. There is nothing that has a 100% win rate. There is nothing that can be, used as a guaranteed thing, thinking that, oh, it's going to happen all the time the same way. No. So you should just expect that sometime it's not going to work. Now, our New York Killzone trading plan, those are the main points, but we're going to go over the examples, go on details. So we're going to determine the type of the daily cycle that we're having, the 3 types, and then also use the other method to understand if we are having a continuation or reversal just by visually looking at these sessions. We mark the higher time frame POI, and higher time frame means M15 and above. So 15 minutes time frame and above. You could go 1 hour and 4 hour and sometimes the daily. Then we wait for the price to react of the higher time frame POI and then look for the other confluences, including SMTs, inducement being taken, CISD, all of those confluences. Then finally we find a lower time frame entry to be taken, right? So we wait for the lower time frame to align with the higher time frame, or the opposite, the higher time frame to align with the lower time frame, and then execute from there. Now we're gonna go over some examples, and the real understanding is gonna be there after looking at the examples. So now we are in pound dollar, and we're gonna look at the price action, and we can see how can we execute based on the plan and what is the best scenario and the scenarios to avoid. So first of all, this one works the best, when it comes to comparing the Asian session, is with any pair with USD. Okay, and I really prefer EU and GU. So that's the first thing. Now, what is the best scenario to look for is this one. I want to see Asian session, and I want to see a deviation above or below, and then a clear market session shift. I really prefer to see it below even the Asian low. So we already had deviation above and displacement below. Okay, deviation above, manipulation above, displacement below. Then wait for New York session to start and look for a continuation to the lower side. Okay, so that's the best one, and I really prefer to see continuation from OTE zone. Okay, that's the best scenario, because most of the time if we see this, there's going to be a strong high, which means it's going to be a high or low of the day. In this case, a high of the day. So looking at the price action below, we want to spot that continuation pattern. It's better than the other types. And we're also going to go over the other types and see how we can actually, execute on those. So for example, we can see agent session here. What happened is, we stop at this point. Let's imagine that we don't see anything here. And we see that we had a deviation below, actually a bullish order flow respecting this fair value gap going higher. And then at the start of this point, what we had is liquidity level, which is this low for a continuation, because now this is actually a strong low because we broke below and we broke structure. That's a strong low. This is fair value gap respected. Mitigation, that's a low inside of a fair value gap. When it's taken, it's gonna be a valid entry to the upside. And also if we take our fib from this level to this level, we can see that it's an OTE zone. This is an OTE zone. From here to here, OTE is going to be around this level. And we can see we have also a fair value gap here with an overlapping. So if we get, any lower time frame confirmation here, we can execute. But I can see that this is actually a low in a fair value gap, which is the best liquidity to enter. We can see that we got agent high here to target. Lower time frame confirmation could be a change of state delivery, or it could be any other type of entry that you prefer. Okay, you could also look for the turtle soup entry based on the opening price that I introduced lately. So any lower time frame entry here is valid. So we can see that we got OTE around this level, and we got this low as well as this low, which is swept now on the New York Killzone. So now we go 1 minute time frame, and let's see what we can do here. So this is first low, this is second low. I want to see price taking this one, confirmation entry, or taking the other one and then a confirmation entry. So you see, we took the first one. I want to see a valid change of state delivery. So close above this high, but now we could have closed above this high also. So you see, closure above, and then we keep going lower. So forget about this one. And now we're looking at the other low here. So price is going lower. It did not take that low, started going higher. So this is not a valid CISD. And then we go lower now, very close to that level. Okay. And then we actually took liquidity and we close above, and it looks like there's some news here. So really no opportunity to enter. It's okay. Now again, 15 minutes. Let's look at the other days and how we can execute based on the New York trading plan. The same scenario happened here. What happened is deviation below agent session started going higher, mitigation going higher, and the start of the New York Killzone is at this level. Okay. Now what we can do, first of all, take the fib from the low to the highest high. We can see we got 61 around this level. Now we also have another valid low here, which we can actually take our fib from, and we can see we got 61 around this level where price actually came back to. In this case, we have no fair value gap here. The fair value gap is fully filled, and we create an order block with a rejection block here. So continuation can be from this level. Actually, price did not take the low and did not come to the the rejection block. In this case, I'll be a little bit hesitant to enter this trade. We started going higher after, so no entry for me here. Personally, I could force a trade here and show you that, okay, there was an entry, but for me, I'll not be entering. Maybe on the 5 minutes, we could see a fair value gap and enter from, but for me, there's nothing. But then we actually displaces above, and we closed above a high with a fair value gap, which means that we have an overlapping here. Now, if you go back and see what happened after and look for a lower time frame entry here, you see we got an overlapping, and then we can actually target this New York previous high. We could target those triple equal highs, right, at the -62 level. So let's forget about the fib now, because this is now our entry. Our entry is the continuation higher, displacement with a fair value gap and a high inside of it. So let's see what happened. We're going back to this overlapping. We close bullish, okay, into this rejection block. Actually, we filled the whole fair value gap. We close higher, and then bearish candle. So there is no CISD as of now, and it looks like, okay, not yet, not yet. And here we got the change of state delivery. So we closed above the last bearish candle or even two bearish candles, and we close above this one also. So I could actually enter here, or maybe if you want a bit of a retracement, maybe at the overlapping of this high. Okay, stop loss goes, I'm gonna put it a little bit below, so somewhere in here, or yeah, somewhere in here. And then you could target, first target is this one. You could target 3 to 1 in this case, if you prefer to trade with fixed reward to risk. But mainly this is the high that I need to target first. 15-minute, you could have some other highs, maybe right here, the highs that I talked about first, and let's see what happened. So we started going higher. The first target, a bit of retracement lower, and price might actually go higher. Yes, there you go, and that's already a profit. So 3 to 1 already achieved around this level, and you got your 3 to 1. That's it. Now back to 15 minutes and see the other days. What we have on the other days, we're mostly focusing on the continuation, but we're going to also have a look at the reversals. Okay, now again, it's continuation here. What we had is what? Asian session. This is the low of the Asian session, not taken at the London, but then the high of the Asian session is taken, and also another liquidity level here is taken, and we started going lower. We had a market session shift, order flow to the lower side, and we closed below the Asian low. So what is this now? This looks to me like this is gonna be a strong high that should not be taken. And then we started going lower, another mitigation, also liquidity sweep here, and closing lower. What happened now is we're gonna take our fib. You could have taken it from here to the low, but the other leg we have is from this high to this low. So this is the time where we're gonna be looking at the chart, okay? Or maybe 15 minutes before, so around this level. You see we close below, and it looks like we have a bearish market structure, right? And we got a valid low here to target because this is an inducement. Now here's the thing, we're going to be taking our fib from the high to the low we have, and we can see that actually I'm going to be using the replay here just to make it clear for you guys. Now this is the time we start. I'm going to remove it here. We got our strong high, we got our new price action leg, and we have first of all an inducement here. We got 61 above it, and we got one fair value gap, second fair value gap, but this one has the inducement. From here we have what? The fair value gap that has the overlapping is actually this one here. So we got an overlapping within those two fair value gaps and 62. So this is a valid zone to actually look for. So as soon as price goes to 62% and then sweeping this liquidity, maybe come into the overlapping, maybe this is the level that we're looking for. Yeah, 61 here. So this is the level we're looking for. Any lower time frame entry here, we could be looking for the continuation. 1 minute time frame looks like this. We're going to be starting, so it's already 7 a.m. This is already near a kill zone. We're going up, taking the inducement, but not going to the the overlapping. I really prefer when I have a big zone, either entering from here, putting your stop loss above the zone, or wait for the overlapping. So most of the time, not trusting this one. I want to see price going to the overlapping. There you go. So price reached the overlapping here, because you don't want to enter from a fair value gap just blindly. You want something to hold price from going higher. So maybe an overlapping or an inverse fair value gap or balanced price range, something to refine it more, so you don't need to have your stop loss all the way above the zone. Okay, that's the thing, because we're taking lower time frame entry, want to take it from refined areas. So you see we got no changes to delivery as of now, and this is not valid for me, and this is valid for me. So you see last bullish candle, we close below, we take it from here, stop loss goes above the high. Yeah, maybe this high, not really. Okay, I think this is already enough. And what we can target is 3 to 1 again, or you could have targeted this low or any low here. You see this low that we talked about, this is actually huge. If you want to target this one, then maybe put your stop loss a little bit bigger, because you're trying to catch a big move. And then we play the price action. You can see we started going lower. Another time price come into the entry, back to 15 minutes. So we're already getting a 3 to 1 if you went with the main entry and the main stop loss. But then price just kept going lower until reaching that -1 level. You see the -1 level and the inducement that we marked before. So this is a continuation example here. Now, same thing happening here. Also, we sweep below, we close above. This one might be a loss because if we take our fib from the low, and we have another low actually here. So if we take it just like this, from this one to this one, 61 is around this level. We got a fair value gap. We got also this overlapping, so might be entering from here, but most likely this is a loss. Now, the moment we actually hit a PD array at the top and start to make a structure to the lower side, you could also scalp to the lower side. So you see fair value gap here to go lower only if this high is taking a higher time frame liquidity or into a higher time frame PD array. Okay, but not really interested in this one. I really prefer to look for the continuation one because it's easier to trade. Okay, now sometimes price will just keep going higher to mitigate another PD array, but this is mainly what we look for. So we look for deviation going lower, market section shift, confirming what? The strong highs, the strong low, or the Judah swing, and then trading with a direction. Now some other examples of the continuation could be this one. So you see we swept the high, we closed below the low, liquidity here taken, continuing lower, same direction with a Judah swing. This one could also be, you could have entered with the liquidity sweep or the Delta sweep entry that I give, or lower time frame CISD, the same as I suggested. This one also the same. So you see the continuation happens more and it's really easier to spot. So you see liquidity taken here, going up, closing above, continuation. And if you can see, actually grabbing the fib, I think it's the 60 or the OTE in general from here to here. Yeah, 61, literally price respecting that one into overlapping and fair value gap going higher. That's really what you should focus when trading the New York Killzone. Okay, same thing here. Price was taking the Asian high, going above, price coming back again, going lower. Same thing happening. Now when trading the reversal, on the other hand, it's going to be a little bit different. What do you see here is London session breaking above the high, going with no significant reversal. You see, with no significant retracement, you see just one single bearish candle going higher, and then a bit of a retracement, but it's nothing compared to this big move. Okay, and a lot of the time you'll see that, okay, price is approaching a POI, and then there is no market section shift or no significant displacement happening after London. What's going to happen is price, because where is the liquidity now in the New York session? Where is the reference level that is before the New York session? It's the London high. You see, we got London high here. Price took that London high and just pushed lower after. Yeah, pushed lower after. That's the reversal trade. That's how you find the reversal trades. Now this is a continuation one. Forget about this one. We go lower. Let's see. We can see we going higher, higher, and then significant pullback. Yes, but we did not reach a POI on the London. A lot of the time, price will take the London high and then going lower. Now it's all about POI. So you see, where did price react off? We were in this. You see, this is an order block here. That's where price actually reacted off. Order block, price reacting, lower time frame entry. That's a reversal cycle of the day. That's the tab of the reversal. 1 minute time frame. I cannot actually go back in 1 more minute time frame, but all you need to see is bullish candle, bearish candle. You enter here, targeting 3 to 1 or the next liquidity level. Okay, so yeah, we're gonna go over euro dollar and look at the same thing. Now, reversal examples on euro dollar, and they're almost the same. So trading GU is almost the same as trading EU. What we have here is Asian session. We just broke below, no significant pullback, just going lower. What happened after is we got this big fair value gap, and when we have big fair value gap, what do? We look for the overlapping to define where price actually could react off. And where do we have the overlapping? We get those equal highs here, which got broken with a fair value gap, and that's where price actually almost got there. So you could be okay if you got a valid market section shift and that time frame, you could have entered. For me, I'm not gonna enter until price touches this level. But after that, what happened is we actually get this creation of fair value gap. Creation of fair value gap, entering lower time frame, going higher. So only if it's a higher time frame, fair value gap, I'm going to be entering from. If it's a lower time frame, fair value gap, I'm not going to be entering. I'm going to be waiting for this level to be respected first to go higher. But this is one example. Actually, taking also this low into the fair value gap, going higher. That's a reversal pattern, okay? And the same thing happening in this day. What we had is price just breaking above the Asian high and above this point, and then just keep going higher until what? So it was going higher. It needs to retraces. Where does it retrace from? You see big order block here, as well as what do we have inside the order block? A liquidity level here. You see this is liquidity level, as well as this one, and that's where price took the liquidity, lower time frame entry here to go lower. We also got after that, if you are not brave to take this entry, what you get after is a fair value gap to continue lower, and then it keep going lower. Okay, so that's the reversal type on euro dollar. Now going back to the left, what we can see is the pattern or the type that I said it doesn't happen often. And what is that one? It's when we have London session inside of the Asian session. So what do you see here? If I remove everything, what do you see happening here is that we got Asian session, high of it is right here, London high is here, and London low is here. So if you can see, we got London session is inside of the Asian session. You see, it's inside. Then that means we got external high, external low, internal high, internal low, because this is a time-based liquidity, but we have another time-based liquidity that is inside of it, which means that that's an internal liquidity. Now what happened after? We mark, in this case, the Asian high, not the London high. And you see, we broke above it. We should go to the left to see what we have to the left. If we have another liquidity level, or we have a fair value gap, we could go to higher time frame, and we can see we got this liquidity level, which is the previous London high, and we took that level, right? So the London high, we took it. Lower time frame entry could be taken here, started going lower. What do we have after that is inverse fair value gap right here. So fair value gap disrespected, because we don't have any fair value gap here, but we can see this inverse fair value gap disrespected here, and price came back to it one time, two times, three times, four times. So four times price came back to it, which you could enter from here, first of all, or from here, or from here, and from here. But if you entered from here, stop loss a bit above, you could have caught that 3-hour trade, and then price started going lower. So this one, even though it doesn't happen often, but it's really high in probability because it's really objective, right? It's really objective. Now, sometimes it's not going to take the Asian high, and you're going to be aware of that this is because of SMT. So you're going to see that it created equal highs here, started going lower. But in that case, GU is going to be taking that high, and we're going to be having an SMT here. Now, when it comes to Midnight Open, on the other hand, because I did not mention it on this video, but I've talked about it before, you're going to look for this midnight candle, right? This midnight candle where it opens. If you were bearish on the day, you're going to be looking for, so you see, this is the opening of the candle. You're going to drag it to the right, and you see, anytime we're below, if there is confirmation, I'm going to be looking for longs. But you see here, price came to this rejection block, for example, or order block, and then started going lower, and a confirmation here to short is going to be valid because we are above the minute open. Now you see, you started coming lower. Maybe here, if you were convinced to look for a reversal, then we are already below the minute open. That's a valid level to look for, or that's a level zone to look for longs, because we are below the midnight open. So it's a filter to know where exactly to look for shorts and longs. So you see this one also, this is the level. Above it we look for shorts, below it here on the New York, so you see where we got below the midnight open, we look for longs going higher. The same thing happening over and over. So you see, this is our midnight open, this is a bullish candle, then it's the body low, and you see here we're going lower below the midnight open. So for example, we took this liquidity level, below it, because we are below the midnight open, we could go long. Above it we could go shorts, and the same cycle happening. But if we already have, so let's say this is Asian session. If we already, here's the midnight open, already we had a strong high, something like this, strong high coming lower. There is no need to go above. You could have shorted from here. For example, OTE, it doesn't need to be always above the midnight open, but it's really better if it is. Okay, that's the end of the video. I hope that I've done a good job explaining the concepts and the steps and the process of trading the New York session. I usually trade the London, but I've done my best in order to put it together for you in the best way. If you appreciate my content, then make sure to hit the like button, subscribe to the channel, and leave your comment if you have a suggestion of a video in the future. Write your suggestions below. This is Molham, and I'll see you next video.